$110 billion? What? Alright folks, Apple season is upon us, and this time the tech giant delivered a Q1 earnings report filled with interesting data points, which I'll talk about in a bit. First and foremost, Apple surpassed analyst expectations for both earnings per share (EPS) and revenue. They reported an EPS of $1.53, exceeding the predicted $1.50. Revenue came in at $90.8 billion, down slightly year over year compared to the prior year's record highs. However, these figures still managed to beat analyst expectations with $190 million. This positive performance sent a wave of confidence through the investor community, reflected in the stock price surging by a healthy 2.4%. Now, let's dive deeper into the specific figures. On the product side, iPhone sales showed some resilience despite prior anxieties regarding the crucial Chinese market. While there was a decline compared to last year's strong performance, it wasn't as drastic as analysts predicted. This is a positive sign indicating that even facing heightened competition, the iPhone remains a dominant force. However, it's important to acknowledge that other product lines like iPad and Wearables did experience year-over-year dips. This could be due to a number of factors, such as market saturation or a shift in consumer preferences. The real champion of this quarter was undoubtedly Apple's services segment. This powerhouse, encompassing services like App Store, iCloud, and Apple Music, continued its impressive streak, experiencing a solid 14% growth. This segment is quickly transforming into a major revenue driver for Apple, showcasing the company's ability to diversify its income streams beyond just hardware sales. Now, let's address the elephant in the room: China. Remember those whispers about iPhone sales potentially taking a hit in this region? While revenue did fall by 8.1% year over year to $16.37 billion, it's crucial to note that it still surpassed analyst predictions of it falling to $15.87 billion. This suggests that even with increased competition from local brands, Apple still maintains a strong foothold in the Chinese market. This resilience is a testament to Apple's brand loyalty and established customer base in the region. However, CEO Tim Cook acknowledged the situation and hinted at some exciting product announcements next week. Many speculate that these announcements will likely be focused on updated iPads, potentially designed to reignite consumer interest in the tablet market. This strategic move could be Apple's way of addressing the decline in iPad sales and solidifying their position in this specific product category. Now, Apple understands the importance of keeping its investors happy. They announced a 4.2% increase in their dividend, bringing it to $0.25 per share. Now, it's nice that they're raising it, but at an yield of 0.58%, in order for me to consider this as an addition to my dividend portfolio, it should be growing at above 10% yearly, following the model of Visa, MasterCard, and other high-growth, lower-yielding companies. However, it's not that Apple can't afford it. They certainly can. They just have other priorities. Apple authorized a massive stock buyback program of up to $110 billion. I want you guys to understand what that means. This buyback means Apple will repurchase shares that are worth the entire market capitalization of a company like Boeing, one of the biggest weapon manufacturers, Lockheed Martin, one of the biggest insurance companies in the world, Allianz, and also, to give you a fourth example, the biggest asset manager in the world whose ETFs we're all using, BlackRock. This bold move signifies their confidence in the company's future prospects. By repurchasing a significant chunk of their own shares, they can potentially drive up the stock price by reducing the total number of shares outstanding, ultimately increasing the value for remaining shareholders. This is also a strategy that one of my favorite companies uses to a great extent, which you can check in my 4 top stocks and ETFs for the current environment we are in report. You can get it from the link in the description. Financial analysts believe Apple is doing an excellent job of keeping investors engaged, especially during this period of economic slowdown. Overall, Apple's Q1 results demonstrate their resilience despite facing headwinds. The strong performance of their services segment and their commitment to shareholder value paints a positive picture for the company's future. However, there are still some lingering questions and potential possibilities on the horizon. One of the most anticipated events will be the unveiling of the new iPad lineup, hinted at by Tim Cook. The iPad market has seen a slowdown in recent years. Will these new iPads be equipped with the features and innovations necessary to reignite consumers' interest? Here are some key areas to watch. First, hardware upgrades. Will Apple introduce significant improvements in processing power, display quality, or battery life? Second, software integration. Could there be tighter integration between iPad OS and other Apple products, enhancing the overall user experience? And third, focus on specific needs. Will Apple cater to different user segments with specialized iPad models, like a budget-friendly option for students or a high-performance iPad Pro for creative professionals? This is something that can reignite the market's interest in the product by niching down towards specific customers' needs. The success of these new iPads could have a significant impact on Apple's overall revenue and market share in the tablet segment. Another intriguing detail from the earnings call was Tim Cook's mention of generative AI as a potential driver of future iPhone and device demand. Generative AI refers to a class of AI algorithms that can create new and original content like images, text, or even music. While the specifics remain unclear, it is possible that Apple is envisioning ways to integrate this technology into its devices, potentially leading to new functionalities and user experiences. Here are some ways generative AI could impact Apple's products. First, personalized content creation. Imagine using your iPhone to generate unique artwork, music compositions, or even personalized educational materials. Second, enhanced camera capabilities. Generative AI could be used to improve photo and video editing tools, allowing for real-time effects or automatic content generation. Third, smarter assistants. Siri, Apple's virtual assistant, could become more powerful and versatile with the help of generative AI, understanding user needs and responding in a more human-like way. While it's still early to predict the exact impact of generative AI on Apple's products, it certainly adds an exciting layer of innovation to the company's future roadmap. Here's my take on this. Apple has been an obvious laggard in the AI race. Companies like Microsoft, Google, and Meta were quick to capitalize and create momentum around it. However, Apple didn't do anything. Here's why. In my opinion, in a classic Apple way, they are not in a rush, but are trying to perfect the customer experience. From what I have read, they have been putting really powerful processors inside their devices in recent years, and in the case of the iPhone, there is roughly 30% of processing power in the device that is left unused. It is entirely possible that they are preparing to shock everyone, including their competitors, with a feature like personalized powerful AI assistant that can be used and stored locally on the iPhone. See how Tim Cook said on the earnings call that they have industry-leading neural engines and unwavering focus on privacy? This aligns perfectly with my hypothesis, and it will be a vastly different model than the model of companies like OpenAI or Google's Gemini, which require centralized servers that basically keep your data. You'll be able to store your data on your device locally, enhancing your privacy. However, it's just that, a hypothesis. We'll have to wait and see what happens, but I just think it is weird if a company like that can stand for a year and a half without a huge AI announcement and just watches their competitors destroy them. Okay, let's move on. It's important to acknowledge the broader economic climate as a factor that could influence Apple's performance moving forward. A potential economic slowdown could lead to decreased consumer spending on non-essential items like high-end smartphones and tablets. Apple, however, has historically shown a strong ability to weather economic storms. This is in part due to the unique place they have created for themselves. You see, I have always seen Apple as a hybrid between three sectors. Usually, they are put in the tech sector, but I think this is oversimplifying things. In my opinion, they are also as if in the consumer staple sector, meaning that a lot of people accept their products and services as absolute necessities, just like they do shampoo or food. And also, because of their premium image, they are also in the luxury goods industry due to the fact that for many people having an iPhone or a MacBook is a status symbol. This, in my opinion, completely transforms their dynamic when it comes to the economic resilience the company has. Here are some more concrete ways Apple might mitigate the impact of an economic downturn. First, as I said, they could occupy a space in the luxury goods market. They could focus more on premium products. Apple may prioritize its high-margin iPhone and Mac lines, targeting consumers willing to pay a premium for superior quality, user experience, and also enhanced status. Second, subscription services. The services segment, with its recurring revenue streams, could become even more crucial during an economic downturn. Apple might focus on expanding its service offerings or introducing new subscription tiers that lock in customers for services they deem essential. Third, geographic diversification. Apple is actively expanding its presence in emerging markets like India and Southeast Asia. these markets might help offset any decline in sales from more saturated regions. So let me know in the comments, what do you think of the latest Apple report, and do you own the stock? Also, let me know what do you think about my AI prediction about the company and if it holds any merit. Speaking of AI, make sure you check this video that should have appeared on your screen already, that will walk you through my entire AI thesis and how it will transform the world and your life. See you there.